Welcome back, everyone, to my new YouTube channel, Invest the Rest. As the name suggests, Invest the Rest, this channel is focused on different financial strategies to get all extra money, extra savings, discretionary income into the market, because more time in the market equals more money, right? So hence, invest the rest being any additional income you may have. It is my opinion that the stock market is one of the most valuable tools to increase wealth. Today is going to be a short video, a update video on the $10,000 high yield dividend focused account. 3 new ETFs that are held in this portfolio announced their dividends this week, and we'll go over those shortly. Before I get too much into the details, as always, I am not a financial advisor, and this is not financial advice. My videos are for entertainment purposes only. So we have the dividend account summary table shown on the screen. For those of you that did express interest, I will be releasing this spreadsheet and a couple other spreadsheets for the other account strategies in the very near future. I'm just working on cleaning it up a little bit, making sure the formulas are right, and I will make this available to people that want to use it for this strategy, a different strategy, or to track their current portfolio progress. So we do have that $675 per month goal. That was based off of the December 2024 dividend payments based on the fund's holdings moving into 2025, right? This account was started with $10,000 in 2025, specifically on January 2nd, 2025, with a goal to make the $675 per month. Scrolling down to the monthly summary table, January we fell a little bit short at $533.83. The beginning year, the market was a little tumultuous. Some of the funds didn't pay quite as well as they did in December, and so we're a little bit more than $100 short. That being said, we were still made $533 on a $10,000 investment in 1 month. Okay, and so that's really good. It provides cash flow, and that money hits your account directly, will be directly deposited into my brokerage account, and can be used to buy additional shares for the following month. That's exactly what we did. I bought additional shares, and it was actually a new fund, right? QDTE was added to the portfolio in February. QDTE is a high yield dividend ETF, but it pays weekly instead of monthly like all the other funds in the account so far. So taking a look at February, off to a little bit of a slow start. Again, the market's been a little sluggish in my opinion, very volatile in some sectors, but kind of sluggish, kind of flatlined overall. So we're up to 372 to date. Where does that come from? Well, we had 3 funds announce this week. One of them is going to be that QDTE. That is going to be announced every week of every month because it is a weekly paying fund. The other 2 accounts that paid were YBIT, YBIT, which is a yield max fund, and GOOY, or GUI, which is also a yield max fund. GUI, we own 70 shares. That dividend per share was announced today, Wednesday, February 19th, and it announced as 38 cents or 39 cents rounding up per share. That gave us a total of it would be nice if it was 200, but it's only $27.14. If we look at GUI's performance in January, we got a little bit lower, 33 cents, so GUI did perform a little bit better in February. And if we compare it to December, unfortunately in December, GUI paid 63 cents. So the starting of 2025, not a good story for GUI. Hopefully it continues to improve for the remainder of the year. YBIT, we own 75 shares of that. 55 cents per share was announced this morning, which gives us a total of $41.30 for the month of February. Taking a look at YBIT in January, the performance in February is also worse. 79 cents in January, and if we scroll up to December, 71 cents in December. So it went 71 cents, 79 cents, and then we dropped all the way down to 55 cents in February. QDTE, 24 cents per share, very, very consistent. That's one of the things I like about QDTE. That is one of the reasons I added them to this account. For most months out of the year, they pay somewhere between 15 cents and 25 cents per share every single week. You know, there are the anomalies where they pay more, maybe towards the end of the year, or they have a really good week if the market is very volatile. But that gave us an additional $3.20, excuse me, per share. So far, February's off to a slower start, 372.69. We would like to get up to that 675.95. But to be honest with everyone, if I was making $533 a month on a $10,000 investment and all I had to do was let it sit and not touch it and let these dividends, continue to roll in, the only thing I had to do was every month was to buy more shares, that would be a very successful financial investment strategy in my opinion. Now that comment comes with a caveat, of course, right? The caveat is that I don't lose on the NAV erosion side of the equation, right? Right now, we're almost at zero capital gain or loss. We've lost $22.89 on our $10,000 that was invested in capital gains. Now you can see, like we covered in the last video, yes, many of the accounts are down. A couple of them are keeping that capital gain number close to zero. But that's okay because that's why I promote diversity in my portfolios. You're never always going to be able to pick the winners. And if you keep diversity, hopefully you don't always get stuck with the losers. Even the losers, if you look at the percent return, they're only losing by a little bit. The max minus 4.88%, that's SQY. But the rest of them, north of 4%, we got 3.92, 1.83 in the red. So not much ground that we need to make up there. I do think NVIDIA, right, which is the underlying for NVDY, I do think they will recover later this year. And so that should also be, that will force NVDY into the overall return and it'll make it positive. So we've earned total to date $906.52 in dividends. That money is deposited directly into my brokerage account. We've achieved an 8.83% return in less than 2 months. Okay, sometimes some mutual funds, some 401ks, you can get a 10% return for an entire year. We've gotten 8.83% in less than 2 months because February is not even over yet, right? Of course, tomorrow I could wake up, the stock market could open, and this capital loss number could increase to, maybe we're losing $200, $300. Even if that were to happen, I'll actually put it in here real quick. If we're down 300, maybe the market takes a dip, we still have just over a 6% total return. And 6%, 3% a month, 36% a year. Yes, our projected yield based on 2024 results, or in December 2024 results, is 77%. But realistically, that's a tall order to meet. That's a high bar to achieve. 37, 38, 39% annual returns, in my opinion, is a win. So we have our goal. It's very ambitious. And if we miss, it's okay. It's still very respectable earnings. Again, in my opinion, I'm very happy with this progress. 8.83% over 6, maybe 7 weeks now. Almost through our 7th week. And we're up, just under $900. So at the end of February, once all the dividends roll in, I will buy more QDTE shares for March. I will also try to dollar cost average some of these funds that are in the negative. It's a good buying opportunity to lower my average cost. So let's say we get up to $500 by the end of February. I will spend another $500 purchasing more shares for the month of March. And the idea is eventually my dividend payments, they'll surpass $675 per month. They'll go to $8, $9, $1,000 per month as I continue to reinvest the dividends to create that dividend snowball. Let's take a quick look at the summary, right? $883 overall if you include that capital loss. Very respectable for a 90% passive account. All I have to do is log in and buy more shares every month. The option trading account, I'll do another video when we have some contracts expiring this Friday. So we will take a look at that again. But based on a few more trades today, we're up to almost $1,300 on that $10,000 initial investment. The growth account, again, 100% passive, invested everything, let it sit in there, let it grow. $400, $405 gains so far, and it's half the dividend account. The main thing there, though, is the dividend account is very risky, right? You're investing in funds, ETFs that are trading. They have an option strategy for the underlying stock. And option strategies have a huge exposure to the downside or a bear market. So the growth account, I always express that that's low to medium risk because, yeah, it will be affected by a downturn, but nowhere near as significantly as the dividend account. So yeah, right now the dividend account is up. We've had a fairly even market, maybe a little sluggish, but no real losses or gains on average, in my opinion, through most sectors, right? Some industries, some sectors will be a little bit different or be an anomaly, but the growth account won't be affected by a downturn. The dividend account in a volatile market, yeah, if it goes straight up or straight down, really is not as good for that dividend account. You want a very even, slow progress to the upside. That's where the dividend account really shines. The growth account can really shine in a more variety of market environments, but of course the gains are less, right? That's the trade-off. So, and then the option account, the most risky of them all, the most active of them all. But check out those videos of those other accounts. I highly recommend it. There's a little bit of everything in here for everybody. And that's the dividend account update. I wanted to go over those three that announced this morning. They didn't add a lot to the account, but they got us really close to that $400 mark for February. And I think PLTY and specifically NVDY, I think if I had to estimate, we'll have very good returns or very good dividends for February. I don't know that for a fact, but looking at how NVDA is tracking and the progress of that underlying, I think NVDY will have a very good dividend payment for February. So that's the update. Like I said, I will have this spreadsheet available very shortly. I'm just working on cleaning it up. I know you guys are interested in that. Let me know what else you're interested in. Comment down below. Throw me a like for this video. You can click right below the video you're watching now. Subscribe to the channel. That really helps me out, keeps me motivated to get this material out there for people. And if there's anything else you'd like to see in my videos, any other strategies, let me know. And I respond to every comment that people make on the videos. And I can learn as much from you guys that you can learn from my videos. So as always, everybody, thank you so much for watching, and I'll catch you on the next one.